NIO stock closed Tuesday session modestly higher, up 5 cents or just over 0.7%, to finish the day at $7.09 per share. It wasn't a breakout day by any means, but it was another session where NIO managed to stay steady above that key $7 level. And in this kind of market, sometimes holding ground can matter more than making headlines. So, what's driving the stock right now? Was there any news pushing it higher? And does this quiet hold mean investors are getting ready for a stronger move ahead? Or is it just another pause before more volatility? Let's break it all down. First off, the headline here is that there isn't a headline. Tuesday was a calm day for NIO, no new regulatory filings, no corporate announcements, and no major macro shock. The gain looks more like a reflection of improving sentiment and technical follow-through from the past few sessions rather than any specific catalyst. After last week's chaos and the legal uncertainty that rattled investors, the past few days have seen something unusual for this stock: stability. And that stability itself is worth paying attention to. Because after a month of turbulence, each session NIO spends above $7 builds the case that a base might finally be forming. The market seems to be saying, we've digested the bad news, now let's see if the fundamentals can quietly do their job. Technically speaking, NIO continues to hold inside a narrow but important range. Support sits near $6.70, resistance near $7.50. This is the same range that's defined trading for nearly 2 weeks now. Every time the stock dips into the 670s, buyers appear. Every time it approaches 750, sellers take profits. The result is a sort of tug-of-war, but one that's starting to show more balance. And balance is exactly what NIO has been lacking in recent months. When panic selling hit over the GIC lawsuit, that balance evaporated. But now, with volatility fading and volume settling, the stock seems to be in a consolidation phase, a stage where the market takes a breath before deciding what's next. That's what Tuesday's movement represents: digestion. Not euphoria, not fear, just the market trying to find equilibrium. Now, let's talk about what's likely behind the recent resilience. There are 3 main drivers here: technical confidence, sector stabilization, and the absence of new fear. First, from a technical standpoint, NIO has now posted multiple consecutive closes above $7. That's important because round numbers act as psychological anchors in trading. When investors see a stock hold above a key level for several days in a row, it signals strength, even if the gains are small. Second, the broader Chinese EV sector has been showing mild signs of stabilization. XPeng, Li Auto, and BYD all traded relatively flat to slightly positive today. None of them are surging, but the entire group is holding their levels after weeks of volatility. That's a good sign, because sector correlation plays a big role in investor psychology. If peers are steady, it's easier for NIO to stay steady too. And third, there's the absence of fresh fear. The GIC lawsuit still hangs over the company, but with no new developments or filings, the market seems to have moved into a wait-and-see mode. Investors have digested the story, NIO has denied the allegations, and now everyone is just waiting for updates. That lack of new drama is, paradoxically, a form of good news. Let's not forget that NIO has been through this kind of market phase before. Back in previous down cycles, after sharp pullbacks caused by external shocks, the stock often spent several weeks trading sideways before making its next significant move. That pattern tends to repeat because sentiment recovery always takes time. First comes the panic, then comes the denial, then comes the slow rebuilding of confidence. And right now, we're in that rebuilding phase. Traders are testing the waters again, buying small positions near support, selling partial positions near resistance, and waiting for a signal that the stock is ready to trend. The good news is that the tone of the market has changed. The fear-driven volatility that dominated October has subsided. In its place is something calmer, cautious optimism. Zooming out, let's revisit the fundamentals. Because while the lawsuit dominates headlines, the company itself continues to execute operationally. NIO's third-quarter deliveries were up 41% year-over-year, a strong result given the broader slowdown in global EV demand. The company continues to roll out its next-generation battery swap stations, with usage hitting new highs earlier this month during China's Golden Week travel season. These aren't small achievements. They show that NIO's business model, built on service differentiation and premium branding, remains intact. The battery swap network continues to be a strategic moat, one that competitors have yet to fully replicate. It's not just about convenience, it's about reinforcing customer loyalty. That kind of ecosystem strength often gets overlooked when sentiment turns bearish, but it's exactly what long-term investors watch for when deciding whether to buy dips or sit out. And that's probably part of what's happening under the surface here. Value investors quietly accumulating while traders debate whether this is a fake out or the start of something more sustainable. Let's talk about the technical map going forward. Right now, the $7 level is acting as a pivot. It's not a breakout line, but it's a line of confidence. Holding above it consistently would be a psychological win. If the stock can break through 750 with decent volume, the next target becomes $8, a level we haven't seen in weeks. On the downside, 670 remains the key floor. Lose that, and the market might test 640 or even 620 again. But for now, the trend looks neutral to positive. Momentum indicators have started to flatten out after months of downward slope, and short interest remains modest, below 10%, which limits the risk of aggressive downside pressure from new short positions. That combination, low short interest, fading volatility, and stable support, often sets the stage for a larger move, but it doesn't predict direction. It just tells us energy is building. On the macro side, global equity markets have been mixed but relatively calm. US indices were slightly higher today, helped by moderating yields and stable commodity prices. That's relevant because US-listed Chinese stocks, including NIO, tend to move in tandem with overall risk sentiment. When global markets are steady, there's more breathing room for individual stories to recover. There's also been some easing in the trade narrative. While political rhetoric between Washington and Beijing remains sharp, the tone has softened slightly in recent days. Former President Donald Trump recently posted that the United States wants to work with China and avoid a depression. That kind of language, even if rhetorical, can influence how investors perceive the macro backdrop. After months of tension and tariff talk, any hint of cooperation reduces perceived risk premiums on Chinese equities, NIO included. So, while there's no direct news about NIO itself, the overall environment has become less hostile, and that's helping the stock breathe. Still, it's important not to mistake calm for certainty. This remains a market that can turn quickly. The lawsuit, trade issues, and investor skepticism haven't disappeared. They've just gone quiet. And quiet markets can be tricky. Sometimes they're the foundation for recovery. Other times, they're the calm before another storm. That's why traders are watching key levels so closely right now. Holding above 7 for several sessions in a row would strengthen the case for a base. Breaking above 750 with conviction would invite more buyers. Falling back below 670 would reawaken the bears. In short, NIO's chart is at a crossroads. It's not bullish yet, but it's no longer bearish either. It's in that gray zone where direction can shift quickly based on momentum and confidence. So what's the takeaway from Tuesday's action? It's simple, NIO is stabilizing. The lawsuit remains unresolved, and sentiment is still fragile, but the stock is no longer being driven by panic. Each session above $7 builds a little more trust in the floor that's forming. Investors are no longer asking, how low can it go? They're starting to ask, can it build from here? That shift in mindset, from fear to curiosity, is the earliest sign of recovery in any stock. It doesn't guarantee a rally, but it changes the energy in the room. And that's what Tuesday felt like, a market that stopped bracing for impact and started wondering if the worst might be behind it. Whether this turns into a proper uptrend will depend on what happens next, not just with the lawsuit, but with NIO's fundamentals, China's policy support, and investor appetite for risk. But after a long stretch of uncertainty, this week has shown something valuable, that NIO can stay calm, even in a cautious market. And sometimes, that calm is where confidence begins to grow. NIO ends Tuesday's session at $7.09 per share, up modestly, but holding steady above the line that's come to define this phase of its story. And that's your Tuesday aftermarket update on NIO.